Welcome to the deep dive. Today, we're really getting into the nuts and bolts of Subaru. Lots of you asked. So we're digging into their 2024 integrated report.
Yeah, it's a good one. Think of it as Subaru laying out their roadmap, especially with everything changing so fast in the car world.
Exactly. And it gives us a shortcut to understanding where they think they're headed.
Right. And their whole vision is delivering happiness to all. It's not just fluff. They say it's inspired by customer feedback. It's about enjoyment and peace of mind.
So that's kind of the core idea we'll be exploring today, how they plan to actually do that.
That's the plan. Unpacking how they want to deliver on that promise while, dealing with this massive industry shift.
Okay, so the report covers their fiscal year up to March 2024, and it includes their new management policy from last August, plus insights from the top execs, the CXOs.
Yep. And they're trying to explain, how they're tackling these big changes, playing to their strengths, managing the business.
And ultimately how they create value, right?
Yeah.
By focusing on those customer relationships.
Exactly. And it's pretty comprehensive. They detail these 6 capital initiatives aimed at competitiveness. Plus, they talk about governance, human rights, stuff you don't always see laid out so clearly.
Gives you a much wider view than just the financials, yeah. Okay, let's set the scene with some key numbers. This is for the year ending March 2024.
Sure. What jumps out?
Well, operating margin, 10.0%, that seems pretty solid. And return on equity, ROE, at 16.5%.
Yeah, 16.5% ROE is strong, especially given the market lately. What about revenue?
Revenue hit 4,702.9 billion yen. Operating profit, 468.2 billion yen.
Okay, big numbers. And market share.
Globally, it's small, like 1%, but in the US, it's more like 4%, clearly a key market for them.
Definitely. Those numbers show they're holding their own. They produced, 970,000 units, sold slightly more, 976,000.
Right, and the business is overwhelmingly cars, isn't it? Like
Yeah.
98% almost.
Yeah, 97.7% automotive, 2.2% aerospace. That's pretty much it. And production is Japan, Gunma, Tochigi, Aichi, and that big plant in Indiana, USA.
That concentration tells you a lot. Okay, let's dive into those segments. Automotive first. That enjoyment and peace of mind seems to be the mantra.
It really does. And you saw it work in the U.S., right? They had that amazing run, 12 straight years of sales growth up to 2019 by tailoring things for that market.
And they're still pushing there, aiming for 680,000 units in 2024. That's nearly a 10% jump year on year.
And long term, they're targeting 5% market share in the U.S. That's ambitious.
So how do they plan to get there? Is it just the cars themselves?
Well, the cars are part of it, obviously. But it's also that connection they build, the love promise thing in the U.S. And it sounds like marketing, but it seems to genuinely resonate.
You see it in the brand loyalty surveys and stuff.
Exactly. High rankings consistently and strategically, they're sticking to their knitting, selection and concentration, focusing hard on cars and aerospace where they think their tech gives them an edge.
Right. And to handle all the industry changes, EVs, software, everything, they've got this Monozukuri Innovation Initiative.
Yeah, that sounds like a big deal. They set up an innovation hub at the Gunma plant. The idea is to get different departments, even outside partners, working together differently.
Moving beyond just tweaking gasoline engines, basically. Preparing for a different future.
Totally. Breaking down those internal walls. It feels necessary for the kind of big leaps needed for EVs. And it connects to things like eyesight.
Their driver assistance system, they've been doing that for ages, right?
Over 30 years. Now they're adding AI, integrating it with new cameras and radar for 360-degree sensing. The goal is 0 fatal accidents by 2030.
Wow, 0 fatalities. That's a huge goal.
It is. And they're working with AMD on the chip, the SOET, for the next-gen AI version. Shows they're serious about the tech side.
People are buying it.
Seems so. They had around 6.7 million global sales of eyesight-equipped cars by June 2024. It's a major feature.
Okay, so what about the actual jump to electric? How are they handling that?
Their buzzwords are flexibility and expandability. The big thing is the partnership with Toyota.
Right, I saw that. They're going to build EVs for each other.
Yeah, sort of. Mutual production and supply. So some BEVs from Toyota's U.S. plant will go to Subaru, and Subaru will build some at their Yajima plant for Toyota, starting around 2025.
And they'll build both gas and electric on the same lines.
That's the plan. Mixed production for flexibility. It's a way to, hedge their bets against uncertain EV demand. Makes sense.
It does seem pragmatic. And this Monozukuri innovation, what are the concrete goals there?
They're pretty aggressive. Things like having development lead time, having the number of parts in a car, having production time.
Having everything. Sounds tough.
It is. They're talking about a new streamlined BEV production process,
Hmm.
likely in a new plant focused on battery and software. That's where they hope to make those gains.
And they're working with suppliers too, like ASIN.
Yep, co-developing and producing e-axles, that's a key EV part.
Hmm.
And they're talking to their traditional engine parts suppliers, trying to figure out how they fit into the EV world, how procurement will work. It's a whole ecosystem shift.
Okay, makes sense. What about the aerospace side? It's smaller, but still significant.
Right. And it has this amazing heritage back to Nakajima aircraft. They focus on three areas: defense, commercial, and helicopters.
The Boeing partnership stands out over 50 years.
Yeah, it's incredible. They make the center wing boxes a really critical part at their Henda plant. Shipped over 3,000 for big jets like the 777 and 787. It speaks volumes about their manufacturing capability.
Definitely. And defense.
They're a key supplier for the Japan Self-Defense Forces.
Mm.
Support, developing drones, making parts for fighters, transport planes. They're involved across the board. And with Japan boosting defense spending, that's probably a growth area.
And helicopters.
They build the UH-2 utility helicopter for the Army and a commercial version, the Subaru Bell 412 EPX. So it's a diverse aerospace portfolio providing a bit of balance.
Okay, let's pivot back to the overall financials for last year, ending March 2024. Sounds like it was a good year.
Yeah, overall, very strong. Demand was robust, especially in North America. And crucially, they managed to navigate those semiconductor shortages and logistics mess-ups pretty well
How'd they do that?
by being flexible, basically. Shifting production schedules, adjusting transportation plans on the fly. It seems to have worked.
And the numbers show it.
Absolutely. Production was up, sales were up. But the headline is operating profit up 75% year on year to that 468.2 billion yen figure.
75%. What drove that huge increase?
Mostly a better sales mix, selling more profitable models, basically, and favorable currency exchange rates helped a lot, too.
Right, the weaker yen. And that profit surge boosted the ROE significantly.
Big time. Jumped 6.5 points to 16.5%. That's a really healthy return on the equity shareholders have invested.
And even aerospace turned a profit.
Yep, 2.7 billion yen profit. Not
Wow.
huge, but it's back in the black after 4 years, which is a good sign. A 4.7 billion yen improvement.
So summing up FYE March 2024, revenue 4.7 trillion yen, operating profit 468 billion, ROE 16.5%, operating margin 10%. Looks solid.
Very solid. And they generated decent cash, too. Free cash flow was about 64 billion yen.
Which is key, right, for investing and for shareholder returns.
Exactly. And speaking of shareholders, they seem quite focused on that. They talk about improving capital efficiency, even with all the EV spending coming up.
How are they planning to do that? Dividends? Buybacks?
Both are on the table. They're aiming for a total return ratio that's dividends plus buybacks divided by net income of somewhere between 30% and 50%.
Okay, that's a clear target range. Any specific dividend plans?
Yeah, for the year ending March 2025, they're planning an annual dividend of 96 yen per share. That's up 10 yen from the previous year's ordinary dividend.
That signals confidence, increasing the payout. Though they add the usual caveats, right? Depends on performance, the economy.
Of course.
Yeah.
And for share buybacks, they're saying it'll be flexible. They'll look at performance, investment needs, market conditions, then decide.
Makes sense. Are they watching their valuation metrics? Like cost of capital?
They explicitly mention it. They estimate their WACC, their cost of capital, is in the 7% range. And they note their price to book is around 0.8, price to earnings around 7.
And they point out their ROE has mostly been above that cost of capital, right? Except for a couple of tougher years.
Yeah, FYE 2021 and 2022 dipped below, but generally they're creating value by that measure.
So what actions are they taking to boost that value further, besides the dividends and potential buybacks?
Well, they list a few things. Improving IR, investor relations communication. Beefing up their ESG messaging, especially around electrification, human capital, governance.
Okay.
And interestingly, revising executive pay, linking it more closely to things like ROE, employee engagement, and relative total shareholder return, or TSR.
Tying pay to performance metrics investors care about. What about their cash pile? I heard it was pretty big.
It is around 1 trillion yen in net cash, mostly in US dollars because the US market is so vital. They admit it's currently more than they think they strictly need.
So what's the plan for it? To sit on it?
No, they say they'll review the optimal level periodically, factoring in revenue forecasts and those big electrification investments.
Yeah.
And they might use some yen-denominated debt, too, to balance things out.
Okay. And investment-wise, where's that cash going in the near term?
It's already flowing. They're adding BEV mixed production at the Yajima plant, setting up a dedicated BEV line at the Uzumi plant.
And renovating the Kitamoto plant.
Right, for next-gen hybrid transaxles.
Yeah.
That's supposed to start operating this fall 2024. Plus general upgrades there for quality, logistics, and things like diversity initiatives, too.
So tangible investments happening now to prepare for that mix of hybrids and EVs.
Definitely. Okay, so stepping back, looking forward. Subaru knows this is a once-in-a-century transformation, as they call it.
You hear that phrase a lot in the auto industry these days.
You do.
Yeah.
Their strategy to navigate it seems to be this kind of three-pronged approach.
Which?
One, maintain financial stability. Keep the capital ratio strong, manage that net cash position. Two, growth investment, heavily focused on electrification now. And three, shareholder returns, keeping that 30-50% total return ratio target.
So stability, investment, and returns, trying to balance all three.
Pretty much. The key will be continuing to generate cash consistently and then using it smartly, both the new cash and that existing pile.
It sounds like a balancing act, investing heavily in a potentially disruptive future while keeping current shareholders happy and the balance sheet solid.
It's the balancing act for legacy automakers right now. Subaru seems committed to stable returns alongside the EV investment, and they're emphasizing more dialogue and disclosure to keep stakeholders informed.
Right. So to wrap up this deep dive into the 2024 report, it feels like Subaru has a clear plan, or at least a clear framework.
I'd agree. They're leveraging their strengths, customer loyalty, tech like eyesight, manufacturing know-how, while making these necessary, pretty significant bets on electrification and production changes. And they're being quite explicit about shareholder value.
And it all ties back to that delivering happiness idea, trying to make sure the company grows sustainably and contributes something positive.
Yeah, that seems to be the thread running through it. So maybe a final thought for our listeners to chew on.
Go for it.
Given Subaru's whole brand is built on enjoyment and peace of mind, things tied to driving feel, reliability, safety, what's their biggest challenge, or maybe opportunity, in keeping that specific identity alive as cars become more electric, more software-driven, maybe even autonomous down the line. How do they maintain that unique Subaru feel?
That's a great question. Or maybe think about it this way. They've got this huge cash reserve. They're making these strategic EV investments. How might their specific approach to balancing that innovation spending with shareholder returns actually differentiate them from competitors in the next 5 or 10 years? Could that be their edge?
Definitely something to think about. We'd encourage everyone interested to check out the full integrated report if you want even more detail. It really shows how one company is trying to map its future.
Absolutely. Well, thanks for joining us for this deep dive into Subaru.
Thanks for having me.